Every Friday at exactly 3:30 p.m. New York time, the biggest banks and hedge funds on this planet are forced by law to publish what they have been buying and selling. This is that report, and it is 100% free. I've been trading for 10 years and I ranked top 5 in the World Cup of Forex trading. That's a real competition, real money, verified. And I'm telling you, this report is one of the biggest reasons I'm on that list. But when I ask traders about it, like guys with 5 years of experience, almost nobody has ever opened it. Like nobody. So here's what happens in the next 15 minutes. Number one, I show you exactly how to read this thing in 30 seconds on a free website, no account, no payment, nothing. Number two, I show you the exact moment this report called the crude oil rally weeks before it happened. And three, I show you the one mistake that makes this data completely useless, because I made that mistake. It cost me real money. And if you skip that part, this report will hurt you more than it helps you. Let's go. So what you're looking at right now is the CFTC, the Commodity Futures Trading Commission. And it's basically the US government regulator for futures markets. So big players above certain position sizes, they must report their orders every single Tuesday. And they do this every single week, probably since before most of us were even born. So this report, which is called the Commitment of Traders report, you can find it right here under Market Data and Economic Analysis. The Commitment of Traders report, it is published every single Friday at 3:30 p.m. Eastern Standard Time. And you can look up all the information in here, and it is 100% free. So whatever futures market you're looking at, let's say for example we're looking at the dollar index. If you use TradingView, you can look up here and you can see the data feed and the exchange this data is coming from. In this case, it's coming from the ICE Futures US. So if I go to the Commitment of Traders report inside of the CFTC webpage, I can basically find ICE Futures US. You can just choose the long format. And when I go in here, I can just search for dollar, and voila, you can see here US dollar index. And I can see the 3 participants in this report, because this report splits everyone into 3 groups. You need to understand this is raw numbers, but they are useless if you don't know who to watch. And I will talk about that in a bit, because it depends what market you're looking at, whether you're looking for the non-commercials, the commercials, or what we call the non-reportable positions, or the speculators. Now I know this looks like a website from 1995, and that's exactly why nobody actually reads it. So as you can see, we have 3 players. We have the commercials, and these are basically producers and users. It could be airlines, hedging, jet fuel, miners, farmers. This is not actual, of course, when it comes to the dollar, maybe commodities, of course. But what you need to understand is they are not gambling. This is their business. They know the physical supply and demand before any news channel does. So it could be crude oil, it could be gold, it could be silver, it could be any finite market, okay, a physical market. And then we have the large speculators, and we call these the non-commercials. They are basically hedge funds and trend followers. And last, we have the non-reportable positions, and they are the small speculators. This is basically retail traders, not you and I, but other players, smaller individual futures traders, retail traders, smaller professional firms, and other market participants with relatively small positions. I use this report every time I decide I want to look for a market. Either I'm looking for a long or a short. I want to see what the big players are doing, and whether it is the dollar, whether it is cotton. Let's look at other market as well. Let's see, for example, crude oil, for example. The information comes from the New York Mercantile Exchange, NYMEX. So let's go back and let's find the New York Mercantile Exchange. It's right here. So if I go into crude oil, the chart, I can see the data is coming from here. I can go directly into the CFTC New York Mercantile Exchange, push the long format, and I'll basically just search for crude oil. It's right here. And I can see how the commercials are positioned, whether they are net long or net short. I can see how the non-commercials are positioned as well, and also the small speculators, which is who we call the retailers. So I would say commercials are the smart money. Non-commercials are the one who are the trend followers. And the non-reportables, the small speculators, they are typically the participant that always comes, too late to the parties when we are looking at extremes. I love looking at this report. I like to see it as a job interview. I always use the job interview analogy because I don't trade a market until I've interviewed it. This report is the interview where the market simply cannot lie, okay? Now, it's very important that you understand this one thing because basically we look at, in this example, let's look at some different markets. Let's look at commodities, and let's look at the Forex market. When we look at commodities, we are very interested in the commercials, okay? The users and producers. They know about the supply and demand in the market, real supply and demand, before any news channel basically does. When we look at Forex, we want to take the small speculators in consideration, small speculators. Okay. Now, I'm not gonna go in depth with why we choose what we do, especially when it comes to Forex. Sometimes you just have to sit in the car and just trust that it can drive. The engine works. You don't have to understand why the engine works as it does. Just sit in the car and drive as fast as you can towards your goal. But when we look at commercials, okay, we wanna find opportunities in the commodities market, which is called the finite market, and Forex is an infinite market. Here we look at the small speculators. So in commodities, we follow the commercials. In Forex, we watch the crowd at the extremes, and this is where we want to do the opposite, because one of these three groups is on the wrong side at almost every major turning point, and that is the small speculators. So we have the commercials, the non-commercials, and the small speculators. I love watching the small speculators because I basically want to do the opposite of what they are doing. But you know what? It's good that they are wrong most of the time because it's good news for me, because it tells me exactly how to act when I look at the market. Now, as you can see, this report looks very, very, very disgusting and very old school. So what we can do is we can translate all that information into a free web page that is called barchart.com. I absolutely love this webpage because it's free. You don't have to sign up. You can sign up if you want, but all the information we need in order to make informative decisions when we trade can be found on barchart.com. So let's, for example, say we choose crude oil right here. And I'll show you exactly now how you set it up. You go to interactive chart right here to the left. And what you do, you always want a 3-year look back. Okay, 3-year look back because we need enough data. Okay, this is the look back we need. This is non-negotiable because no history, no context. Okay, then we go up here where it says daily, and we want to choose this one that is called weekly nearby. It gives us more a smooth, chart. I like to look at candlesticks, so you can choose candlestick open to close. And this is basically what we want this upper part to look like, okay? And now we want to add the positioning data. Now remember, we want to add the right group to the right market. So now we have a volume indicator. We don't need that. You can just push right here on the delete plot. And then you want to go to indicators. Now, I know it's called indicator, but it's not an indicator. This is real market data. So if we search for the Commitment of Traders report, just write COT. We want the one that is called Commitment of Traders chart. We don't need the disaggregated financial index over true range. Just take the chart. Okay, this is basically it. And here we can see the 3 different participants. We have the commercials, we have large speculators, and we have small speculators. Today, we're not going to look at large speculators. Let's remove them. We are mainly going to look at the commercials and the small speculators. Now, since we are looking at a commodity, crude oil, we want to look for the commercials. So I'm going to apply them right here. Okay, so first of all, I just need to choose 3 years. Here we go. Now the chart is complete. So weekly nearby, 3-year look back, choose candlesticks if you want, and use the COT report right here. And because we're looking at crude oil, as mentioned, we look at the commercials. Now, I want to show you a trade that I called weeks before the move even happened. Let's check it out. I could see crude oil approaching a demand zone right here. A small body candle followed by an explosive move. So I know this is a zone of accumulation, and we have probably some unfilled buy orders down here. And I can also show you proof. This is inside of our Discord group. I called this move weeks ahead on the 1st of July. And if we look at the crude oil right now, we could see the rally where price moved this is a weekly time frame, by the way, where price made multiple bullish candles, okay, for over 2-3 weeks. Okay, so the whole month of July, crude oil was almost bullish. So how did I call this move, and how did I make money on this move? Now pay very close attention. On the COT report, say we only have this picture right here. Now on the COT report, I want to see this. I want to see the behavior of the commercials. I want to see them do something that is against the current trend. I want to see the commercials do the opposite of what price is doing, opposite to the trend, telling me there's a possible reversal incoming. So this is exactly what I could see. At the same time, crude oil was declining, approaching our demand zone right here. Look at the commercials behavior. They were going long. Every single week price fell, they were going long. So they knew that higher prices were incoming. Now, if I go to the left, I can see the last time we were at these levels, we saw a rally. So I have my timing element, which is the demand zone right here. But at the same time, I can see the commercials, users and producers, they are hedging long. They believe in higher prices. And that's exactly what we saw. Price came down, touched the demand zone. At the same time, we saw the commercials adding long positions. So this was my sign that this trade was a very solid trade. Now, do you honestly think that reaction was random? It's not. Everything can be seen. But however, we need to remember one thing. The fundamental tools, the COT report is not a timing tool. The timing is at the demand or at the supply. Let me give you another example. I'm now going to go down to a daily time frame, and I'm going to show you exactly how I called a multi-week decline on crude oil. So on this date, the 30th of April, I saw price approaching this supply zone up here. We have the small body candle, okay, small body candles right here, followed by an explosive move down, telling me we probably have some unfilled sell orders up here. Price comes up, touches, and we actually get this decline all the way actually to the demand zone right here. So how could I know that when price was approaching this supply zone, we could expect a decline? Well, what I did, again, I went to barchart.com and I looked at the commercials behavior while price was going up to an extreme. I could see that the commercials were going short at the same time. Look, price is going up, but the commercials positions is declining. They are shorting. Now, if I look back, if I just go to the left right here, the last time the commercials were here, look what happened. Price fell. If I go back again, the last time commercials were here, price declined. So the expectation when the commercials are back at a position, a net position where we expect a decline, at the same time, it's inside of a level of supply, this is where we can expect a strong reaction. This is exactly how I multiply the probabilities that a move is going to happen, okay? This is exactly how I know with high probability that something is going to happen very, very soon. The only thing I'm waiting for is basically, the touch of a supply zone or a demand zone. And at the same time, I want to see the reaction, okay? I want to see the reaction and I want to see the commercials behavior. Now, this is just, commodities. Let's look at, for example, a different asset. Again, just to see that this is not random, okay? You can see everything in advance. You can see everything beforehand. Can you forecast moves? Of course you can, okay? Of course you can. So let's, for example, check out the dollar index. The dollar index right here, okay? I'm gonna give you a very good example. So on this date, the 27th of January, okay, 2026, we start seeing a rally. So now, as we are looking at the Forex market, what we want to do is we want to go to barchart.com. I want to find the dollar index. It is right here. Okay. I go to the interactive chart. Let's see. Let's make this load. We go to the interactive chart. And what we do from here, we need to remember one thing, because when we are looking at a Forex market, we don't want to look at the commercials. We want to look at the small speculators. So we go down to the COT tool and we choose small speculators, we remove commercials, and we apply. Now, when it comes to these small speculators, we want to see the opposite. We want to see that the retailers are going extremely short at a point where we expect a reversal up, and we want to see the retailers go extremely long when we want to see a possible decline incoming. Now, as we could see here, the dollar has been bearish for the last couple of weeks. You can see since the end of July, we have seen dollar declining. And look what we can see on the report, on the COT report, looking at the retailers' behavior. Check this out. They are up in a extreme. So at the same time price was rallying, they were going long. Now, last time we were up at these levels, let's go back to the left. Last time we were up at these levels, what happened? The dollar declined. And this is exactly what we're seeing right now. Now, at the same time, let's look at the opposite. If we go down here, this is the date we were looking at. This is exactly the date I was showing you right here. Let's go to the daily time frame right here on January 2026. Now, as we can see here, January 2026, it's right here. January 2026, we saw a rally, but look at the retailers. They are extreme short. And when they are extreme short, we want to see price start moving up. It's inevitable. How can we see that? Because last time the retailers were down here, look what happened. Rally, let's go back again. Rally, let's go back again. Rally. So when they are down at these extremes, we expect price to move up. Okay, so if you have ever felt like the market turns around the exact second you enter, you're not crazy. It's not bad luck either. You simply entered when everyone like you entered. So at this point, retailers were going long because they thought the dollar was going up. We had an uptrend, and you did the same. And the big money, they can see all of you on this page. So at the extremes, the crowd isn't just wrong. The crowd is actually the signal, okay? Now, before you run off and short everything, the banks are shorting, just stop, because this next part is where this report destroys people, and it nearly destroyed me. The mistake is basically treating positioning as a timing tool. As I said, you need to have a basic understanding of supply and demand. Now, extremes can stay extreme for weeks, for months, while price keeps running against you. So what you basically need to understand about the COT report is it's a weekly compass, since the information is updated weekly. Remember, we only want to be on the weekly time frame when we watch, when we watch for the COT data. So remember, this is not a stopwatch, okay? This is not a stopwatch. It is a compass. So therefore, you need a trigger on the chart itself, a place, for example, where trapped traders are forced to act. As we looked at here, we had the supply zone up here, and since we have small body candles, we could see there is a huge amount of interest, a fair price between buyers and sellers. Now, since price exploded down, we probably have unfilled sell orders up here. On top of that, we also have some trapped buyers waiting to close their trade. This is exactly why we got this reaction. So the report tells you who is positioned, but the chart tells you where they did it. You need both. One without the other is simply guessing with extra steps. Now, you obviously will not get a winner every single time. For example, here we're looking at the gold futures and it touched a supply zone some days ago, but if you look at the commercials, they are going short at the same time. But we didn't see a reaction on gold. So sometimes you don't win, and that's basically business. It is what it is. So now, of course, no 100% win rate exists, and this doesn't predict all the news, right? And it will not make you rich by Monday. It's one input for weekly direction where you risk small. Of course, you always use a stop loss, and here the goal is to still be here in 3 years. You want to protect your capital. I love to use the COT report because it helps me eliminate over 80% of bad trading decisions. So for example, let's say that I'm looking for a short on a market. It could be a commodity, but I could see, the commercials are going extremely long. Why would I short it? Why would I go against the big players? So if someone sells you a tool that always wins, okay, you're not buying a tool, you're basically buying a story. You can't win all the time. So just to conclude everything, you don't really need the CFTC webpage. It was basically just to show you where the information here is derived from. And yeah, have fun with it. Remember, when you look at commodities, you always look at the commercials. And when you look at Forex, you always look at these small speculators. As a matter of fact, let me just show a last example, because this was a beautiful trade we did in my group. And it was actually on the NZD, on the New Zealand dollar. Price touched a beautiful demand zone down here. And we saw this beautiful rally since 26th of June 26. Let's go to the COT report. Let's find the NZD. And let me show you exactly how I called this rally weeks in advance. Let's go here and let's use the small speculators, since it's a Forex market we're looking at, and look at this beauty. At the same time price was falling, look at the retailers. They were positioned net short. They were believing, okay, in lower prices. And remember, the retailers are always late to the party. So look, let's go back and see what happened the last time price was, or the last time the retailers' positions were down here. If we go to the left, look what happened. Rally. If you go back again at these levels, look what happened. Rally. Okay, let's go back again. Look what happened. Rally. Look at where we are. We are at an extreme low. So this rally was inevitable. So when you look at Forex markets, always think the opposite of the retailers. Look here, they were extreme long. What happened with price? It fell. Last time retailers were extreme positioned at longs, look what happened. It declined. What happened the last time? It declined. Again, this is data, and the most amazing thing is no one can hide this from you. So now you know what maybe one trader in 100 knows. Every single Friday, 3:30 p.m. New York time, the biggest players on earth put their cards on the table for free. So the real question was never, is the game rigged? The real question is, why would you keep trading blind when the answers gets published every single week? Start small. Just pick one market you actually care about. Check the report every Friday for 1 month before you risk a single dollar on it. This is a skill and not a lottery ticket. And if you want to learn this properly with structure, the free community is the first link here below. And that's where we go deeper on this exact process. There is one thing this report can never tell you, and that is where on the chart those big players are hiding their orders. There's a footprint they leave behind every single time. Same shape, every market, every time frame. And once you see it, I promise you, you will never be able to unsee it. And that's the video right here.